Alright, but anyway, kind of how I'm gonna go about this is start here at September 3rd. I'm gonna hop in here. Okay, you guys should already know what the three models are. You should already know what we're looking for. Okay, assuming that you watch the videos. And we're gonna go forward here, and I'm gonna ask every one of you, okay, before I say it, will you take this trade? And then from there, we're gonna take it and go forward. So, without further ado, we're gonna go to the New York session. So primary focus here is going to be the New York session. All right, so just so we know. So firstly, obviously I have to go up to the higher time frames. It's always the most important. And if we look at the higher time frames, okay, let's go to the daily chart. All right, so we came up, tagged internal buy stops here. Okay, we're actually entering some type of consolidation, right? So internal stops been tagged. We trade up into this higher time frame volume imbalance here. So always, first and foremost, key levels is going to be the most important. So we're delivering off of this right here. All right, so extend that through. And then I'm going to drop down to the hourly chart once more. So as you can see here, we just had all these highs stacking up, and then we actually trade up and clear. Not as much as we typically like to see, but we do come up and clear all these daily highs up here and actually fall short of that volume balance, and then we create an intermittent term high here, and then we displace. So I think it's pretty prominent here on this day, especially with how London session set the stage above that midnight opening, right? And then slam down. I'll be looking for these internal clean lows right here. So with obviously daily bias in mind, and then what we're seeing on the hourly chart, I would look for a run on sell side down below here. So we're primarily going to be focused on sales. All right, so what I'm going to show you guys here is, okay, let's take our Fibonacci tool. So here's a low, here's a high. Okay, this is probably the ugliest Fibonacci tool you'll ever see, but this is not my regular one. This is on FX Replay. As you can see here, we drop down, and we're now creating an up candle right at equilibrium. So this could be a potential model number 2. So let's go ahead and play the tape. Let's do the 5-minute chart, scale down. Okay, so we just have a large drop down right at 9:30 there. You see that? So let's just get onto the 1-minute chart. So, I mean, really just dropping down here. Not really any significant retracements here up into this gap here. So let's keep it going. So actually, if we take the dealing range here, I'm going to take the low up to the high. Equilibrium is about here. So let's get onto the 5-minute chart again. So I'm hunting a model number 2 right now. And this actually would be valid. So initially I thought it wouldn't be, but here's equilibrium here at this green line, extended through. Here's an up candle. All right, for those that are familiar, okay, I want you guys to let me know, would you take this as a model number 2 down into sell side here? So I'm going to go ahead and map out the up candle here, okay, because we're already, relatively got close to the draw, right? And we'd be anticipating this gap to stay open. Why? Because it's up candle, and that's what I teach with model number 2, of course. And once we tag up into that, I'm asking you guys, would you take that? So let's go ahead and take the RR tool. Okay, and it's going to be, if we zoom in here, okay, remember this green line is equilibrium, so this up candle was formed right there, so I can take this off. It's not needed anymore. Now, I'm going to go ahead and put the RR tool just anchored right at the low here. Okay, stop goes above the up candle. And then obviously, going to be down here for the take profit, the sell side. Okay, so let me know, would you guys take this? All right, and then I'll tell you what I think. All right, so model number 2 here, potentially. Okay, let's go to the 1-minute chart. I want to see if there's that. Okay, so we're going to go ahead and do this. All right, and as you can see here, that obviously would have been tagged, except, in this case, we wouldn't have been filled right here. Just put it slightly above. So I guess that's the only downside to FX Replay, but it just goes so fast. But anyway, it ultimately does tap up into that up candle, utilizes that immediately, and it does offer a 1 to 2 risk to reward. So if I don't like to take 1-to-1s, but the fact that this offered 1 to 2 risk to reward definitely makes this valid. So as you can see here, what was the narrative underway? Well, we quickly were able to derive a bearish bias from the daily chart. We got down to the hourly. We swept hourly highs. We created that intermittent term high form of market structure, right? London created that classic bearish power 3 for the day. We had an initial expansion to the downside. We had an obvious drawdown here below this low here. And Thursday, August 29th, daily low right here, right? And then we scaled down. Instead of trying to chase the move, we allowed a real model to set itself, getting in tune with the trend. And that just so happened to be one of the models I teach. So in this case here, stop loss always goes above the up candle. We wouldn't even have to run for our money there, okay? Just go straight down to take profit. So anyway, there's 1 for 1 there. That would have been about 40 handles on one contract for the NASDAQ. So by default, you can do the math there. That would have yielded $1,000, so not bad. So this is going to be Wednesday, September 4th. So after Tuesday's, obviously, pretty obvious sell program, we found ourselves with deep consolidation here, leaving all these highs behind, right? So I mean, I think it's pretty apparent here by default. I mean, it'd be reasonable to hunt longs here. So if I go to the 15-minute chart, all right, I mean, it's just a ridiculous amount of highs are being left behind. So, I mean, at the very minimum, I'd like to see a rally up in these relative goal 15-minute highs right here. Let's go to the higher time frame. Okay, derive our narrative, because, you know, I mean, it's really really that we don't have any purpose being here if it's not, you know, our idea is not being derived from the higher time frame. All right, so as you can see here, we deliver into a discount daily fair value gap. Okay, so it really doesn't matter what you're using, as long as you have a real key level that's, you know, something that actually has any bearing on the marketplace, right? That's where you're going to frame your model up off of. Okay, so the very high of this blue shaded area is number one, the daily fair value gap high, but also this old daily sell side liquidity low here. So Wednesday, August 14th low right here. So we're sweeping discount sell side relative to this low to the high, and we're down to inefficiency on the daily chart. And we have an obvious opposing draw. Number one, we have new day opening gap here with the volume balance. Okay, so with that, we're going to scale down to the 5-minute chart, and we're going to go forward. So, does our model perform? Well, here's right at 9:30. Slams right to the upside in our favor, right? Here's our midnight opening. We banged through that multiple times. All right, so we came down, bumped this short-term low. I'm sure there's some type of SMT divergence here, but I can't really, you know, show that with FX replay, which is, you know, one subtle downside to it, but it is what it is. Screwing on through. Okay, nothing I would take in here. I mean, it's just going to be a consolidation. There we go. All right, so we get a real expansion now. So we create an intermittent term low out of the gate at 9:30, and then we have a real expansion in price. So let's take a look. See if we have anything that supports the model. So, I mean, by default, I'll be looking for a run up into new day opening gap. So let me know. All right, we have a breaker here. So we have a low, high, lower, low. Here's a breaker here. We're extending that to the right side of the chart. We scale down to the lower time frame, right? Obviously, we create a fair value gap here. Let's see here. So RR, so fair value gap out of the breaker. Let me know. Would this be valid in your guys' eyes? Okay, so we're gonna go ahead and put the target to right up here, smack dab middle new day opening gap. This would offer stop loss 32 handles, amount 750, risk to reward 1.5. All right, so let me know. Would you guys take this? Would you guys take this? It's a 1.5 risk to reward, and your stop loss has to be, you know, relatively wide relative to this large gap. Let me know if you take this. All right, and then I'm gonna let you know if I would take it. I don't like it. I say yes. Okay, I got 2 yeses and 1 no. Don't like that too. All right, so it's a mixed bag. We got two people saying no, 2 people saying yes. So let's see if we have a tiebreaker. All right, no. All right, perfect. All right, now I'm gonna give you guys my answer. I'm gonna say no, because if you listened to me earlier, this is a 1.5 risk to reward ratio. I don't take anything unless it's a minimum 1 to 2. And the stop loss has to be pretty wide. This right here is one of those setups where it's like, obviously it's something that we normally look to take, but look how wide the stop loss has to be, and also look at the RR, right? So we'd be targeting new day opening gap, right? That'd be the most reasonable target with all these highs right here. And I don't go for anything unless it's 1 to 2 risk to reward. So that's obviously not going to be in line with my model, and the stop loss also has to be wide. So let's go ahead and extend this forward, and we're going to go ahead and see if anything else that's up. All right, so 1 minute, it actually does have a nice impulse candle up off of that. So okay, consolidates a little bit, actually re-delivers the gap. Okay, now we're actually expanding the upside, up right back down into the fair value gap there. A little bit of a sideways movement here, and wow, there we are. So we were wrong, or we weren't wrong because we said we wouldn't take it, but this obviously failed. Okay, even if this were to pan out, right, and it delivered the take profit, I wouldn't have cared because it's just simply not in tune with my rules, right? So here's that macro coming into play, so 950 to 1010, and as you can see here, you know, along with us just having like these suspect lows below us, right, below the opening price, we obviously just weren't able to support our risk management plan. So the first thing you look for is your actual model, right? And we have 3 models for those that trade with me live here. The model, it was like subtly there. It wasn't even really there, but I will give it to you. There was a breaker for value gap, whatever, right? And we had obviously the higher time frame sentiment supporting, right? But the risk management plan didn't align, so we don't take it. I don't care what the deal is. Okay, if you're scared to miss a move, you're probably gonna lose money on trades like that going against your risk management plan, right? But anyway, We have 10 a.m. news driver. I mean, obviously a 10 a.m. news driver. I mean, come on now. Price influx is lower. Takes out all the lows down here, which would obviously add to any type of long setup that might ensue. And then we just leave these 15-minute highs here intact. Right? So we have that. We drop down below the lows, so we're going to go ahead and drop down to the 1-minute chart again and see, does anything perform that is of substance. All right, so this thing, I mean, expands the upside. I mean, so we're really having a back and forth carnival ride here, so there's obviously nothing I would take here. All right, and we expand above. All right. Anyway, huge influx candle down. Okay, I'm going to go up to the 5-minute chart because the 1-minute chart is obviously a carnival ride at the moment. All right, and then we have this 15-minute Ferrari gap delivered right here. So obviously we look for an expansion above that because we know that the draw is up here. Okay, most specifically the highs up here. So all this gunk left behind here. So we have consolidation, triple top here, equal 15-minute highs right here. So really I'll be taking my Fibonacci tool from this high because this was the most prominent nearest swing high that led to this entire drop down right here. So if you take equilibrium, okay, focusing on buying below equilibrium here and then targeting the first presented premium buy side liquidity pool, which would be right here, and then eventually right up here. Okay, so we came down and swept these lows here. I'm pretty certain probably ES came down and swept all the lows. So we'd have SMT divergence. Okay, going to the 5-minute chart, or actually 1-minute chart, excuse me. All right, so let me know. Are you guys taking this? We have two down close candles right here. Okay, and this would be in support of model number 3 because we're attacking opposing prey. Right, so we have 2 down candles here. We have a Ferrari gap. Okay, this would support model number 3 because we're using P2 as stepping stones with already predisposed bias to the upside. Right, so we're already bullish. P2 like this. So let's look at the RR. Okay, before I ask you guys again. Okay, so I mean realistically, we'd be buying right in here. Stop loss will go below midpoint of this Ferrari gap, and then below this down candle right here. So in this case, we'd have to open it up a little bit wide, so it'll be a 32 handle stop, and then we'd be looking for, if I can scale up for a second, this would offer almost a 1 to 3 risk to reward ratio, so that's not bad. Okay, definitely suits the risk management plan. Let me know, are we taking this, are we not, and then I'll answer. All right, so, all right, everyone's saying yes. So Thompson, yes. Lucky, yes. Sim, okay, Alex. So I mean, 2 factors are leading to this, right? It supports model number 3, right? And obviously the bias is bullish, right? And the risk management plan is definitely able to be respected. All right, so let's go ahead and roll it. I believe I can buy here with the RR tool, so let me try that. All right, so let's go back down to the 1-minute chart and let's see how this does for us. So we're buying here. Stop loss down here below midpoint of this Ferrari gap. Okay, and we're already weathering this one. So we're buying the first one, stop loss below. Okay, it should not retrace us deep if it's going to be valid. All right, and all right, so we have a nice spike down there. So it does trade down to consequent encroachment of the imbalance there, but it swiftly closes and rejects away from that. So let's go ahead and roll it. And as you can see, it just came down for the stop loss. So we take that. We also said it was good risk to reward, right? And inevitably it comes back down with this high resistance environment. All right, so let's see if we get another expansion. All right, huge expansion there. And obviously it goes to take profit now, but it hit the lower end of that stop loss. All right, so let's go forward. Now let me know. This Ferrari gap right here, let's go to the 15-minute chart. Are we still in the buy side liquidity? Have we reached that? Have we reached the full terminus? No, we have not. So by default, what are we going to be expecting? Continuation. So we had this banging around here. Price expands to the upside. We have another Ferrari gap presented here. All right, anyway, so let me know. Are we taking this, right? We're using this as a roadmap. Okay, we got through this, obviously, high resistance environment. We consolidated, and price is continuously proving that it wants to go to the upside. We expand. We create another Ferrari gap. And our main objective in that premium is still not met. So are we taking this right here, 1-minute Ferrari gap? Long position here. Stop loss goes below, up into, obviously, our main target that we had initially, right? Risk to reward ratio is 1 to 2. Let me know, are you guys buying this? All right, so aside from if you would still be in this trade, whatever the case is with that, right? If you had your stop loss larger, right? Would you be taking this after we have this expansion above and it's getting a little bit more, low resistant? Would you take this and then would you target the high up here given the risk to reward and the completion of model number 3 with those 50-minute highs untapped? So we have 1 yes. Okay, Sim Gold would add a position to it. Okay. Alex says yes. And I'm going to say yes with this because, I mean, it's becoming more obvious and it's really going in our favor here. We have an obvious draw here that's yet to be engaged, right? Okay, 1 2 restore ward. And let's go ahead and put the long position on here. Take the Ferret gap. Okay, stop loss does its thing. I mean, this is a pretty reasonable stop loss, right? Offers the 1 2 restore ward. Okay, let's go and skip it forward. All right, so making our way to take profit. And let's see if those 50-minute, the 50-minute highs get tagged. And there we go. Beautiful. Stop there, and then we re-enter here. Just using the PD waves as a roadmap just becomes more obvious here, and this is in tune with model number 3 because we're attacking left behind liquidity from the previous day. We had structure present itself, we have manipulation, right? There we go. There's a completion of model number 3. So all right, and heading to 9 a.m. Okay, we're definitely in a range here on September 5th here, so I don't even know if I would take a trade on this day based on the sentiment. Going to be a rather erratic day, but I would like to see if we can clear these lows and then make a run above all this gunk left behind here. So that would obviously set the stage for model number 3. So anyway, let's go ahead and roll the tape here. And I mean, just not much substance with that New York session here today. So I mean, if I even go to the lower time frames, right? All right, so we are dropping down to those lows, so that's pretty good. Okay, 8:30 we had a news raid. Okay, it takes us above these internal highs here. Let's go forward. Okay, here's our 9:30 opening. Price influx is higher once again. So let's see here. Let's go to the lower time frame. So we are able to come down, sweep these lows. So that's actually nice. All right. We actually just matched them there, but we were able to take out yesterday's 10 a.m. data low. So that news raid low was taken out. We have all this left behind. So really, I would be looking for a nice run above previous daily high here. I mean, because this is ridiculously obvious low resistance or high resistance liquidity left behind from the previous day, and this is a really good opportunity for model number 3. So whenever we're consolidating, right, your best bet in tune with higher time frame bias. So we already kind of framed that. So like right now we're inside of this daily Ferret gap, right? So we trade down to this discount inefficiency, and that's kind of what we're utilizing the higher time frame. And not to mention, we swept this internal discount sell side liquidity here below August 14th. So I already showed you guys that, right? All right, but anyway, here's our 9:30 influx higher. All right, we're delivering off the daily gap. We already know what we're looking for in the higher time frames. All right, let's go ahead and skip this forward, see what takes place. All right, so here's a large expansion out of the range. All right, see that? What's the draw? We're looking for previous daily high. Okay, we do have internal highs here, but most specifically, nothing is targeted more intraday than previous daily high, previous daily low. We already took out data low here. I'm assuming that ES probably took out these lows. And yeah, so let's go ahead and hunt. So this right here, I can already view as a classic breaker. Let me go back to the 15-minute chart. Okay, this is going to be delineated for our breaker. So we have a low, high, run on sell stops. These are the up candles that we would utilize. All right, and then we're going to scale down to the 1-minute chart. Okay, there's obviously Ferret gaps left in tune with that 50-minute Ferret gap. So or 50-minute breaker, excuse me. And I'm going to scale down here. See if we drop down. Nope. So it just consolidates, spikes up again. So pretty much a little bit of an odd day, but I mean the bias is pretty clear in my eyes. So all right, we drop down. Here's a Ferret gap. Okay, I mean it spikes off pretty quickly. So let's go forward and see if it would actually fill us. Okay, so it would there, but it just like 2 quick snaps off. So in this case here, previous daily high probably delivered. There we go. So it spikes up into there. Okay, I would have taken this, but like real time, the wick, it just comes the whole way back up. So if I would have came in here and be like, okay, would you take this, right? It would have came down, right? And then the real time wick, I can't have that real time fluctuation. Just one candle and it shows the close and open, right? So if it comes down, I can't put the RR tool right up here and be like, oh, okay, here we go, because then it's just going to be open my stop loss more wide than real time. But anyway, this here would be a completion of model number 3, right? So yet again, showing that the models repeat. I mean, it's pretty prominent at this point. Here's a breaker, here's a low, here's a high, here's a lower low. All right, so we don't need this P&L here to show us that this thing's repeating. Okay, so I'm not going to catch every one of them, but just realize that this is repeating. Okay, what was the draw? Previous daily high. Okay, I mean, it's pretty obvious in this point here. Okay, we're looking at the daily chart. Okay, we're going to be expecting some type of correction. We've been consolidating. We took out the lower end of the consolidation and previous news rated low. We have this left behind that I showed you guys from yesterday, and this would complete model number 3. I mean, just look at all these highs stacked up here, right? And then we have Here's 950 macro, so time is obviously aligning. Okay, here's the 930 opening. What does it do? It expands. It does have any willingness to manipulate whatsoever? No, because it doesn't need to. Why? We already set the stage with this drop down here. So price already did manipulate. It's leaving behind all these highs. Everyone feels comfortable putting their stops above these highs, right? They dive it down, take this news rate low right here, boom. Okay, what's it going to revert to? Previous daily high. And then we expand post 930, so it doesn't have a willingness to manipulate in the opposite direction, right? It's actually expanding in our favor. So here's 930. All we do is expand because we already set the stage here, taking out sell side. There's no need for price to manipulate lower in this case here. So when it comes down for Ray gap, boom. Lower time frame for Ray gap inside of a higher time frame breaker. That is model number 1. And we look for previous daily high, boom. There we go. So there's, I mean, literally 4 days in a row now. At least model 1, 2, or 3 has absolutely 1000% performed. So let's go ahead and extend this forward. All right, here we are. So let's go to the higher time frames because that's most important. And okay, here's 830 opening here. Okay, so pretty erratic 830 opening here, to be honest. So I mean, what I'm seeing here is it's Friday. Okay, we've been in a range. Okay, 830 is manipulating to the upside. We clear out these highs right here, right? So 5-minute chart, or actually, excuse me, hourly chart. Okay, we actually trade back up into this volume imbalance up here. I believe this is new day opening gap. So we deliver up in new day opening gap. We trade back up into this old order flow, this consolidation. Price is already cleared by outside liquidity right here. So previous daily high has been engaged. And then Thursday creates this 8-minute term high and expands to the downside. So, I mean, by default, without even looking at the daily chart right now, my best bet would be looking for sales here on this day because we take our fib. Okay, we trace back up into half of Thursday's daily range. Okay, we trade up into a premium new day opening gap. We already had a run on buy stops. We already have, you know, price has been bearish the entire week, right? We had bearish order flow going through. Thursday already retracing the range, so I wouldn't be expecting Friday to do so because Thursday's already done the due diligence of doing so. Okay, so at the daily chart, you see we slide down here. Next potential draw would be right here below this August 13th daily low right here. This would be the next thing I'll look for price to, you know, obviously draw down into. Okay, so 5-minute chart. I mean, immediately we're going to be looking at this down close candle be broken. I mean, if we were on a live stream, of course, right, we'd be looking to see if this can be broken. All right, and just keep in mind, these are the models that we trade live day in and day out. So, I mean, it's not a matter of if they work because we already know they do. And that's not arrogance, it's just experience and results. But anyway, we're going to wait for 930 opening here, so we don't really particularly interested in selling right at 930. So let's go ahead and extend this forward. All right, so 930 has a small Judah swing to the upside, fills in this Ray gap, trades into this balanced price range here, rejects off instantly. Let's see what takes place after this. All right, so we have a nice expansion of the downside. We're now cementing an intermittent term high, right? And first and foremost, right, this is a pretty prominent model number 3 because if you take a look, all we've been doing since the opening is trading to the upside, trading to the upside. We trade into a key level. That's new day opening gap and buy stops here. And now we're creating structure, situation bearishness, and then we have an expansion. All right, so let's go ahead and extend it forward, see if a PD array serves as a stepping stone for us to short. All right, so a little bit of consolidation, no problem. All right, and it actually just trades right up. This old consolidation expands down, so let's see if it offers anything else past this because we're still going to be looking for 830 low for a full completion of model number 3. All right, boom, here we go. Here's a Ray gap traded up into. We've yet to reach 830 low here, so that's the main draw to complete model number 3. Let me know. Would you guys take this? So we're trading up into a breaker right here in the 5-minute chart. We have a lower time frame for Ray gap within it. So this is actually model number 1 and 3 overlapping. So would you guys be shorting this for Ray gap and putting your stop above the breaker? Let me know. And I'm going to show the RR tool, show what it looks like in terms of our risk management plan. So I'm just going to put it right at the rally there because I'm not going to play around with, you know, fills and whatnot because real time it's just different. But in this case here, stop will go above breaker. Take profit just below 830 low. And this would actually be a 1 to 2.3 risk to reward ratio. So are we taking this? Are we not? And I'll give you my answer after you guys let me know. So we have yes. All right, Sim Gold says yes. Yes, yes, for show. Good morning, Brian. Yes, but stop loss is wild. I mean, yeah, but it's still, yeah. But, you know, we're targeting 118 handle. So, I mean, as long as it supports risk to reward and you're willing to put on the risk, right? I think it's all right, but obviously real time. This is a little bit different. It's NAS 100, so I'm honestly not sure if it would be that large of a handle stop loss. I'm not sure if NAS 100 is a little bit different. Yeah. All right. Anyway, we have all yeses across the board. I'm saying yes because we have an obvious drawdown here. This is model number 1 and 3. Okay, the P&L is $1,100 with that first day, but obviously I've skipped past and it doesn't allow me to go back. But anyway, we're going to go ahead and place order here. Boom. All right, so we're shorting the market here. Stop loss above. Let's go ahead and roll the tape and see what's going on. All right, so it actually closes in this Ferrari gap completely, which our stop loss is weathering that. Okay, expands down. Let's go through. Remember, this is model number 1 and 3. All right, so boom. So with this expansion here and engaging this low here, okay, stop loss would obviously get lowered, right? So, I mean, risk would be not that much on the regular NASDAQ. And there we go. So full take profit was hit. And that completes model number 1 and 3. So beautiful. I mean, this is a beautiful trade right here, honestly. But this is, I mean, a very clean model. I mean, honestly, if this performs today, I hope it does. Anyway, let's go to the next day. We're going to go to, so okay, so it's going to go to the weekend. Okay, of course, 8. So here's Sunday. Let's go to Monday. So heading into that kill zone here. Let's go to the 15-minute chart. So, I mean, we delivered out of Friday. Price already retraced at its due diligence to the upside, right? So it's probably going to look like a continuation on this day, but we'll see what really ensues. So I'm going to go back down to the 5-minute. So creating an animated term high here, displacing down, heading into 9:30. I'm going to scale down so I don't accidentally go too much forward here. All right, so here's 9:30 opening, absolutely soaring to the upside. Like I said, I mean, out of the gate, I would expect an obvious continuation of sells, but what I'm going to do here is we're delivering into this hourly gap, right? We all know the tendency of Monday. Okay, I teach it to you guys live. Whatever the previous week's been doing, you're going to expect Monday to use that as a continuation. So we have here price trading above this hourly swing high and this hourly Ferrari gap. So us trading into this higher time frame key level here can potentially set the stage for model number 1, 2, or 3. And I mean, out of the gate too, I mean, even, you know, initially with looking for Monday continuation, I could also kind of frame a long scenario here because we're coming up off an intermittent term low. We swept that higher time frame sell side. We're already in a discount, right? We expanded away. So, I mean, I wouldn't be opposed to a drop down and then bullishness, but we'll see if any of the models present. Okay, so 9:30 manipulates higher. Let's scale down to the 5-minute chart. Let's go through. Okay, so price actually influxes higher here by the short-term highs again. So buy stops are obviously being exhausted. We have all these higher lows being left behind here. So this can be a potential for model number 1, or excuse me, 3. Let's go forward. All right, so we now have 3 drives now up into that hourly Ferrari gap, deep premium priced in. Let's go into the 1-minute, so I'm not skipping past anything. All right, so we have another expansion to the upside. So it's just, you know, just keeps gunning here. Okay, I'm obviously not going to be taking this distance to support any of the models here, so I'm not going to ask if anyone would take that. All right, and there we go. So we now have a large displacement to the downside. Okay. All right, and we can reasonably look to capitalize on model number 3 below all these higher lows left behind. With that deep premium being priced in, all we did was trade to the upside. We're up into a higher time frame key level. We're delivering up out of that. We displaced. I would look for model number 3. So for Ferrari gap right here, okay, was not filled. It just slams to the downside. Let's see if it fills it. Nope. So it just slams down, leaves us open. Okay. So in this case here, if I were to short this without the Ferrari gap, I'd just be opening my stop loss wider than I would really want to, right? So anyway, all right, so pretty much this thing just slams straight down. Okay, consolidates a little bit, slams down. So let's see if there's anything off of the lows now delivered down here. Okay, so we deliver these lows here. Let's see what sets up. All right, so we drop down below a short-term low again. Okay, let's look at the 15-minute chart. So what's taking place here? What's the key level we'll be trying to utilize here? So, all right, we missed the first initial move. That's okay, fine. You're going to miss moves. You're not going to be a part of every single move. Even in hindsight here, right? But anyway, so what do we look for? We delivered out of the hourly gap. Okay, it's Monday. We're not going to be expecting, you know, a huge trending day. We're going to be expecting range bound, right? And continuously attacking internal stops, right? As you can see here, we deliver midnight opening, and we take these internal lows right here, 15-minute. So who's making money? Obviously to the downside, and it's a Monday. We have the tendency in mind, and let's look to see, does the model present going against all these lower highs that were left behind? Let's take a look. All right, so we have a nice 3 drives pattern now down into midnight opening. Beautiful. Let's see if we get an expansion. Nope, consolidating a little bit. So we have a 1 drive here, 2nd drive here, 3rd drive, all down in the midnight opening. Okay, so we already delivered those levels. We're not expecting trendiness on a Monday, right? Of course. Just continuously bumping out new lows. All right, nice expansion there. Beautiful. And I mean, it's just kind of an erratic Monday. I can't go back here and ask this, but there is a breaker here. Right, low, high, lower low, takes out the short-term low. Here's a Fourier gap. Right, this would definitely support model number 3. Stop loss just go below this candle, or the breaker here, excuse me. So it goes below the Fourier gap and the breaker, and I would just simply target internal highs right up here. Okay, that's from anyone that's been selling, and then obviously previous session high up here. Okay, with it being Monday tendency. So let's see. And as you can see, this was a little bit higher resistance at the moment, but this right here showed its hand for the model. Model number 3. And that was obviously tagged, so I wasn't able to get the replay on it and buy it because I skipped past it too fast, and at that point it wouldn't be a valid RR. So anyway, let's fast forward, see if that previous session high was hit. I would probably not be, I mean, let's be realistic, I probably would not be holding for this high up here. I'd just simply just get out here. So that would offer about 18,544 flat up into this high here. 60, we'll just call it 80 handles. So I mean that's obvious. Come on now, it's more than enough. I'm not sure if it's exactly 80 handles in the regular NASDAQ. This is NAS 100, but I mean 80 handles is ridiculously nice for a Monday. But anyway, the main narrative here was what? Well, we came down, swept these 50-minute lows. We delivered midnight opening, which is a very, very key level. We had market structure presenting, right? We traded down to a discount relative to this low up to the high, boom. And then the Monday tendency for us to work both sides of that daily range, right, and not be trending. So in this case here, we got a very large expansion above, an obvious expansion above, right here. Okay. Trades down to a Fourier gap. Here's a breaker overlapping. Okay, this is not model number 1 because there's not a higher time frame breaker, but this here would just be a classic breaker plus Fourier gap. That's the PT rates I'll be utilizing as our roadmap, right, to engage what? Opposing obvious stops up here for those who have been selling above this swing, or putting their stop above this swing high and this swing high here, and then previous session high. So model number 3, beautiful. So it's now 8 days in a row now. The model shows its hand at least once. I mean, you obviously have to be patient through these days like this. I mean, real time, I'm not factoring in the psychological pinpoints, right, on these days here. So whenever you're back testing, that's why I always say live time is miles more effective in growing in your trading and learning and teaching than back testing, because it's just hindsight, right? Obviously it's pretty accurate here with the models, but live time, nothing beats it because you don't have the real-time psychological factors in play.